Good morning and welcome to another episode of Man Over Market Live Trading. Today is Thursday, March 26th, and it's 10 o'clock a.m. Central Standard Time. I guess that's Central Daylight Time now. Lewis Borsellino, author of The Day Trader, From the Pit to the PC, will be sharing his charts and proprietary indicators during this session. He is accompanied by Anthony Borsellino and Chris Kahn today. And I have to turn off my background sound. Oh, somebody else did. Thank you. As by way of disclaimer, and we still have a lot of videos going on in the background here. So sorry for the interruption there. Disclaimer, trading futures, options on futures, and retail off-exchange foreign currency transactions involve substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or most of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. The following information is an expression of our opinions and is provided for educational purposes only. And now to Lewis and his charts.
All right, we got what we want. We got some action going on today, and I'm going to start with this chart because I like to brag. You know, when you're right, you're right. When you're good, you're good. All right. So here's a 4-hour chart based on that. We were talking about the Fibonacci retracements, and I woke up to go to the bathroom for the 7th time about 4:30 this morning, and I came downstairs and I saw that the market was down here, and I actually put this chart out saying I thought that the market was oversold down at the bottom, and I thought that the market would trade up to my objectives were 43, 44 and a quarter, 49 half, and then we got the bull bear zone of 53. We've kind of basically in bracket B made that move. So now we're kind of just stuck in the middle. Here's the day chart. And last night I put this out saying I thought that the market could retrace to here, and I would be happier if it retraced to here. So now, as the market takes a breath for today, I think that the next area is this 2026, which I think it might be the Globex low. I'm not sure. I got to take a look again. And then 2020. So if you look at the bottom of this day right here, that was on 2.5 right there. So that's where we are. And then the 4-hour chart, I put this, if you're not familiar with this is the Keltner channels, and I put the Keltner channels up just to see, because I look at the 4-hour every day religiously to see what's going on. And so they definitely were oversold this morning. However, they are still pointing down, so that doesn't, that's the problem with indicators, is that they can stay in that state for several hours. All right, so now we're moving back inside this area that I deem the middle, okay? And so I'm looking here. I'm going to switch these around because I've got my neck twisted around. Here's our 1-minute chart. Here's the advanced decline chart. Okay. And I'm going to leave my profile over here. All right. So I got us dipping back inside it here. Okay. Definitely, if we trade down and below here, I think you got to get short the market right here in this area. Okay. So I'm looking at that as an area to be short in the market. Okay, we have above us at 48.5. I've got the 30-minute pivot still. Let me put this on here. So we had a lot of things out I put out this morning. That I thought between 48.5 and 50 it would be difficult to get through. And as you can see, we have the pivot there at 48.5. Oh, I'm sorry, that's the 30-minute. 15-minute is up here also. That's the one I was looking at 48.5. So that's still intact right there, right? So I put the 30-minute pivot in yellow, and that's where we're at. We're cited kind of neutral right now, okay? When you take a look at the CCI, it's gone from red to gray, and I think the market's just sort of taking a breath right now until it makes up its mind on the next leg. So that's where we're at. Anyway, so for me, I want to. If you take a long, you're going to have to, keep it close to the vest, and I think that anything back below, let's say 44.25, you got to worry about, you got to think about. I'm sorry, yeah, 44.25. Then you're going to think about exiting that trade. Okay, so we still have also. So I had a bunch of questions already about single prints. Okay. And I want people to understand what a single print is, okay? So you see all these letter C's down here? To the right of them, there is no letter, corresponding letter going there. So B and C is not a single print anymore because you have B next to C. These are single prints right here, right? And then up on the top, these B's are single prints, all right? So if we look on the profile going back, okay, all right, we covered these, and then these are still single prints right here. These letter K's from 51.25 up to 53.75, okay? And this 53 is our bull bear zone because this is where we fell out of bed from, okay? All right, so markets like to return to their, the places of, the return to the scene of the crime, like we did from Fed Day. Now we covered all the Fed Day. We went yesterday. The low of the day ended up being the low of the day on Fed Day, 52.25. So when I talk about single prints, so now we still got a boatload of single prints, right? I mean, there's a boatload up here in bracket F from yesterday. Okay. So there's no corresponding letter moving forward. You can't have a single print going backwards, all right? So the letter has to come down. That means it's not covered. So it's the one that's moving forward in front of us. Okay.
The ones you pointed out were from overnight.
These are from yesterday.
Lower.
So Chris is pointing out that these are from yesterday, from when the market actually broke yesterday when we got through 2078.5. We never looked back. Okay. And then I will talk to you. These are from overnight. Okay, bracket K. These are the overnight single prints. Okay. And then today, here's the day session single prints. These B's and then these C's down here. So that's what we're looking at. All right. Our day mode is right here at 2046. Okay, you can see it in purple. All right. And our IB range today is 20.50 down to 20.36. Okay. So that's telling me that this market is it's consolidating now, but when it makes its mind up, it's going to go big one way or the other. So that's what I've got there. Other time frames is basically this 48.5 and right here. Okay. Now I keep these bands up. So this was the band that I talked about earlier in the morning, 45.25 to 49.5, and we made a high of what 50 even, 50.25. I think the high is today. So far, the day high is 50.25 right here. All right. So my 1 minute chart. Here's our advanced decline right there. Okay.
It looks pretty balanced today. When you look at that, do you think it's Too many singles at the bottom?
Well, that's when I look at a profile like this, I think that means that we're gonna trade on both sides. And I said that earlier in the commentary. Given the way the profile is shaping up, I thought that the market's gonna be a two-sided trade. Yeah, we got a balance here, starting to build more volume up here. So if it moves down and we get a mode shift, then I think these things will come out.
Otherwise, it's looking like a P.
Down, we get more between. Chris saying if we print between here and there, and this becomes more like a P, then we could be looking in for a rally, right? So we're at that area I was talking about, 4.25. If you were long, this would be below here in this area. You would think about stopping out. Definitely, if we get below 41 even, we got to think that we're going to go down and take out the lows.
Yeah.
Okay. Are there questions out there?
There's a question about the book map. What do you see on the book map?
I'll bring the book map over. Not much activity. When markets get volatile, those algorithm guys have to go away. All right, just got offers up here where you would expect them, the 48 area. Okay, nothing on the downside for right now.
Crude is quite a bit off its highs.
Yeah, crude didn't make a nice big. Here's the crude oil. All right, we're taking a look at crude. And I basically had this morning that we have to give about 51.37 again for it to so mid high 52.5. So Chris, here's a P. Is that a P or not a P?
Yeah. Oh, let me see where it ends.
What do you think that is?
Is that a whole thing? We've got all these singles below.
Yes. This is here. Let me move this over. I can get that to go over. How do I do this? I'll reset the daily splits. Now, if you have technical questions about profile and oscillators and things, now's the time to answer. Because Chris has read every book known to man. She's a human oscillator. She seriously,
Stick with the profile.
we were talking the other day. How much, if you don't mind, how much money you think you spent on education over the last 8 years?
Oh, certainly over 50,000.
$50,000. And everybody has the Holy Grail, correct?
Oh, that's what everybody says.
Right, exactly. And you started trading. So I met Chris. I was doing I actually wasn't trading at the time. I went down and did a DTI Trading Academy, and I came in there and I basically talked about my 10 rules of trading, And like I told everybody before, I wrote those rules in 1998, and they're still uniform today. So there's a profile from yesterday, there's the overnight. That's where it came from yesterday. So is that a P or what?
But look at all the volume down below. It's like the time is a P, but the volume isn't. So we've got time up. I mean, we've got volume up here. Yeah, I was looking at all the volume down. And
yeah, well, you know what? We should split this at A, so that will give us a better idea, right? So we still have the night mode up here, 51.40, right?
Mm-hmm.
So going through consolidation.
Well, that was quite a rally. It wouldn't surprise me that people took profit up there off of that.
Yeah. Here we are. Now we're back going in the middle over here, right? We got our advanced decline. We're looking for what would happen if we close before below 41. Okay.
There's some questions here if you
Okay. Go ahead.
All right. This is from Carlos, one of our Twitter followers who follows us on YouTube.
Okay.
He said, you sent these 2 tweets in this morning. Can you explain the idea, please? One rotation from the high is 2043.5, and the second rotation was 2040 even.
All right. So if you guys are familiar with our so, and here's another, let me point this out. So CCI is coming down in here. We're looking for it to cross. All right. We want it to cross again. That's what we want. So we talk about average rotation. We look at the 30-minute time frame and what's the average rotation in a 5-minute period. Okay. So if I look at this high, okay, which is basically 2048.75. So the average rotation right now is 3.5 points. So what's 2048.75 minus 3.5? Assuming this ends up still being the high, okay? I look at when we put in highs and lows, and then I try to see, what kind of rotation they're going to get off those highs and lows. Okay, that's what I do. So this is 2048.75.
25 quarters.
So I was looking for it to move back to 25 quarter, right? And then after 25 quarter, it did stop there, right? So let's do another rotation. Would take us to 1204.75, right? So what was the low right here? I'm sorry? No, that's in there. That's not right.
Like
You're
getting 32, actually.
All right.
Something.
Hold on.
2045.
25 minus 3 point.
I want to say hello to Carlos and say thank you for your nice comments on the blog.
4175.
All right, so the next rotation we'd be looking at is 41.75, which I think we got to. That was 2 rotations from the high, right?
Yep.
So I should, keep track of those things and not do the things that I do sometimes. So does that make it? So if you look at it, we put this high in and we went basically 2 rotations down. And we stopped, and now we're kind of in the middle again, right?
What frequently happens on those double rotations is that I think it takes stops out, catches people. They're not expecting the expanded rotation.
Right. So, people get long, and then they decide they're going to, So obviously we're having a battle here in the middle, right? We're still having a battle in this middle area, and we have to decide, where we're going to go from there, right? So it's really not going anywhere right now.
All right. One of the top step trader people that are watching, tuning in. Minka has a question for Lewis. I saw that you watched the ES ticker on daily, but the front month ticker is ESM5 on the daily chart. Gives total different information. Which one do you trust?
On the daily chart, all I did was I made a daily chart, and then what we have a preset on our charts. We have a preset. Let me go. I'll show you how I build it.
You're basically asking about the continuous contract versus the.
I believe so.
Oh, okay.
No,
this is 24
like
hours.
to hear what you have to say, because that's always an issue.
Yeah,
if you
I know.
look at one, you get one price is the low. If you look at the actual contract, it can vary quite a bit.
So let me tell you something. I've been going through this battle. Pat and I have been going through this battle since we started trading again. Because when we were trading in the late 90s and early 2000s, I didn't give a lot of credence to the overnight market, right? But it exists. So we look at both, but I use the continuous chart to trade. So we use our indicators on both, but we use the continuous charts to trade. Because if you look at, let me see here. Is this no, that's not what I want. All right, so this is a day only profile. So now I know I got a gap up here, right? We got this gap, lower opening up there. We got a little bit of a gap still. So, you know, you're right. It's different information. Some people like to look at both. Some people don't.
She sent a picture too. Okay.
Okay.
So yes,
right.
Minute chart.
I can tell you. What's your name, Carla? Carla? Is that your name?
Aminka.
Aminka. All right. Well, I can tell you that we have gone back and forth on this because, you know, there's a lot of school of thought to say that the low and the high is sometimes already put in overnight, right? So I watch it, but for my trading, these are continuous charts. They're not 24 hours. I do keep one. I got it closed down right now, but I do because we have some indicators that we put on that. Well, we like to put our pivots on it, and you're right. If I built the chart right here that was 24 hours, like if I went to this right now, let me go back and make this a 5-minute. All right. Okay. All right, if I went to this and I made this a 5-minute chart or made this a day only, so I would go to here, style, I'd go to settings, I go to futures and show day only. Okay, so now I would look at this and say, okay, let me look at what I have going on now, right? Okay, that moves, that's got my 5-minute pivot, all right? It's still in a cell, all right? 5-minute pivot still is in a cell, right? They're all in it's still in a cell here. Okay, let me see what the 30-minute pivot would be at, or the 15-minute pivot. So that's the one thing it does. It does change things up for the pivots and stuff. So, especially when we're looking at those indicators. So the 15-minute pivot would be up at 65. So because of the overnight action, it takes a while for the day chart to adjust to what's going on in the volume and what's going on down here. So, you know, that's why, and especially if you had the night like the day we had today, you want to make sure that you're, you know, excuse me, I want to make sure that I'm on the 24-hour chart versus the day chart.
But when you're talking about the continuous versus the contract, like the ESM5 versus using the other symbol, like @ES hashtag is the one I have to put in because I use DTN.
Right.
Some merge the data too.
And they merge the data. And I know I posted a crude chart, and because I used the continuous contract, it really didn't show the low that was the real low.
Yeah.
So I know that, you know.
No, when I worked at Ninja, a lot of the guys would call in with the same issue, and you'd have to go in. There was a setting where you selected "Do Not Merge," and it reflected the correct information. So.
Yeah.
There you go. I didn't even know that. I just click continuous, and I get the continuous, and if I want to see a day one, then I'll create another chart that has the day on it. So.
All right, ready for another one?
Yeah.
One of your Twitter followers and YouTube followers, Erica. Lewis, at which point yesterday was it clear to you the market was going to the downside?
Oh, that bracket F yesterday. That's where you know, just like this 41, right? I think that if we get below there, the market's going to move down. Okay, and yesterday, for me, it was the move from the middle that we caught right here. When we closed below here, when we got below this 2079 right there, okay, it was obvious that we were, I mean, to me, based on the studies that we've done, that we were moving down. So.
There's a lot of single prints down there yesterday too.
Well, you know, we kept talking about that target yesterday of the single prints in bracket K from the Fed day, right?
Right.
So we kept talking about it, so we knew it was kind of a target, you know. I just think that
Yeah, they went down to what, 62.25.
we went down to 62 and a
Got the
quarter.
ball rolling.
Yeah.
So, you know, it was funny because if you look at on the Fed day, I kept telling people that the, you know, if we look back to the, if I can separate it now, I don't know, I can get back to it. I mean, let me see here. This is from, I kept looking at the Fed day. Let me see here. I gotta look for B right there. So, I don't know where they're at anymore. I have to look back, but yeah. So I mean, we were talking about those single prints, and also what we had back there was the gap. We had a gap. I believe when I looked at the market, it went from 62.5 to 72, or it was like 65.5 to 72 without a trade.
Without a trade.
Without a trade, and then that's when they had.
That was on Fed day.
That was on Fed day. It was on Fed day. So, it's still looking at that.
That
So
would be considered no support.
that would be considered that a bunch of buys came in and buy stops were hit, and there was no sales until 72. So that's another lesson to learn. If you're trading with stops, don't trade with a stop limit, because you get a market like that, you won't get filled, and you're going, oh, I had a stop in. Well, if you have a stop limit that says, okay, I want to, let's just say you put a stop limit here at 48.75, and all of a sudden some news came out and it just went screaming, right? It went screaming, all right, and it went from 48.75 up to 55 or 53 without a trade. If you have a stop limit, it doesn't turn into a market order. It means that you want to be filled at that limit, 20.48.75. So people make this mistake all the time, right? They put what they call in a stop limit.
Yeah, with the zero offset.
What is it?
With the zero offset.
Mm-hmm.
And on most of the platforms, they have an offset you can set.
Yeah.
Is the number of ticks you will accept past this price.
Okay.
So they put it in with a zero offset and then don't get filled in. And they come back to their computer and put down a bunch of money wondering why they didn't get filled.
Yeah, I don't, that's not my, if I got to stop, it's a stop. And if it gets hit, it gets out. I don't look for, I'm not looking for any help any other way. So now we're getting a rally out of the middle again, right? And, so basically our range is 41. The bottom of this range right here to the high of the one I talked about this morning, 59.25. And I got our pivot up there, so that's what we're looking at right now.
All right, you ready for another question?
Go ahead.
Erica wants to know how you split your market profile.
How I split it, like instructionally, or when I split it when I'm looking at it?
Like the session.
I split it at B. So, I just basically, so I'm looking at the day action right here. So I split it at B.
Regular trading hours?
That's regular trading hours. Yeah. Right. And this is 24 hours.
Okay. All right. One of our Twitter followers, Nick J, says, I think this is to Chris, it's still cheaper than my college education.
Well, if you don't graduate in 4 years, did he get out in 4?
You got to add time and
yeah, travel,
lost income.
My heart goes out to you. I have a daughter who was at Northwestern, which is not cheap. She got $4,000 a year to play soccer, though.
That's nice.
It's the other $59,000 you got to worry about.
All right.
We had 7 kids go through college. 7.
My son was at Tulane, but that was It's a little less than that, but not by much.
No, I don't think it is. Tulane's a great school.
All right. Your guy over at Top Step, Fred Decker, if you see a break in the market, yes, overreaction days and react days, do you look for fundamental news which can drive the prices, or is there enough information in the price action to make good decisions?
I don't. I mean, unless it's catastrophic news, I don't even look at news. You know, it's funny. I used to do a lot of CNBC, and they go, "Well, in the Wall Street Journal." I used to look at them and go, "That's history. It's history. That news is history. Unless it's, 9/11 was news. The Greeks backing out again is not news to me. So I don't. I don't like. There's some people that's all they do is, I guess they sit on the Bloomberg terminal and see something negative and see if the market's going to react to that. So I think that I really don't trade on news.
Can I ask a question?
Go ahead.
Like the big move in oil, supposedly a result of the problem in Yemen, but some people would say that was already built into the chart. That move was going to happen whether Yemen happened or not. What do you think?
Well, what I think is that oil has made a move from 113 down to 33.
Okay,
so
that answers the question.
Right. So there, you got to expect some short covering rally, right? But do I think the price war is over? No, I still think the market's going to go down and make a low that's going to be ridiculous, something like $25. But it's all about timing. So I don't know how an event like a plane getting shot down or this Yemen news and what I guess you were telling me this morning, our president and our Secretary of State are on different sides of the issue.
John McCain.
Oh, John McCain.
Yeah.
All right.
Different sides.
All right. So they're what else is new? But at the end of the day, I don't think that unless it's something that is I'm still baffled by the Fed taking out the word please made the reaction that it did, or patience.
Yeah.
I'm baffled because they didn't say anything differently. I mean, look, they're backed into a corner. There's not much they can do at this point. They're backed into a corner.
Everybody hangs on every word. Can I ask a question about your trading yesterday when you said like bracket F was when you saw it? How would you enter in that case? Would you sold the break, or did you wait for a retrace?
I know. Yesterday. So here's the middle move. So today you're going to get chopped up if you shorted every time it came through here or went long every time you went through here. So I got to be waiting for if I'm looking for a short, it's got to be underneath 41. Okay. And and I'm looking at the profile down here, and they're gonna wake it. If you're short right now, I think they're shaking you out. Okay.
Yeah.
Remember, we got the bull bear zone up to 53. All right. We've got this 30-minute pivot at 48.5. We got that high. So I think that right now they're trying to shake out anybody who's short. So
all right.
If you're long, this is your area. This is sort of like what happened yesterday too. On Tuesday, we went down and broke after I was talking to you, and I was really angry because I kept looking. The profile almost looked exactly like this one. Almost looked like this one. I kept, this ain't finished on the bottom. This is a buying tail, and I kept looking at it and thinking, this thing has to move. And then we were butting up against top of value at the time, right?
Yeah.
So now, I mean, the top of value is still way above us. I mean it's at 55.25, right? So I mean, it may be a target and whatever it is at this point, but we still have to get through this 48.5, 50 area, okay? And the market is telling us right now it's still kind of neutral, right?
Yeah.
With all the oversold, I mean, like I said, I thought the market was oversold. If we go back to that chart, the 4-hour, I mean, if I could just do it right here, we'd go on a 4-hour, throw the 4-hour up on here. So you got a 4-hour chart. The pivot's way up there now. The sell pivot up there is like 2085 or whatever that is. So, you know, it just the market tends to do this stuff there where it makes these overreactions. So unless we get above the bull bear zone in that 44 in that area, you know, I'm looking for an opportunity to stay with the trend, which right now is down. So and there's the 53 we keep talking about right here. You know, the bull bear zone area.
Ready?
Pat,
Yeah, go
Pat Abbott says hello.
Oh, tell him I said hello. Dad. How are you?
He says our
You're
quality is good today.
You're the only member of the team not here, Pat.
I'm missing you.
Yeah.
All right. We got one of our trades. We got Top Step Trader guys. Trader Sean.
Okay.
When a price gets into single print area, is it expected to just run? Is it expected to just run or just go to where?
Well, you know, Sean, that is the $24 question, right? So, you know, when we start looking for single prints and things like that, and okay, so we got the ones we have left are here, right, up to 53 to the bull bear zone. Okay, so it could get here and stall and then go back and then run, but like yesterday, that's the hard thing, right? You keep looking at the single prints. We got into the single prints and they just slowly kept going down, and yesterday was a trend day down. And how do you go and basically with a trend day down, you're waiting for a retracement to sell it, and they don't give you an opportunity to sell it because it never bounces more than 200 points. And I kept saying that yesterday and putting that out on Twitter. When you get these trend day downs, that you know that's what happens. So I can tell you sometimes they run and sometimes they don't. You know, it has to do with you know the market conditions, but
The larger context.
so now we're looking at the CCI has now turned. Am I in the right time frame? Yes. So CCI, you know, crossed the middle here, went to gray. Now, well, actually, it was back here when we crossed, right? We went from red to gray to green to gray to green to gray, green. We're crossing up this area right now, but we still haven't taken out this 48 area. Okay. Will this make a liar out of me today and just keep going? You know, there's a see, and that's the problem, right? It's got all this stuff. It's got all this stuff that has that's attracting it to the upside. Okay. And now this is an attractor to the downside. Now, you know, a lot of people would say this is a buying tail and that the bottom has already been put in. Like Chris said, she thinks she sees a P here, right?
Possibly.
Possibly. So.
Day's pretty young.
Yeah, it is young.
I mean, we didn't take out overnight low. So sometimes that becomes the, you know, we can't take the low.
Well, we went down there. We didn't take out the overnight low, so the Globex low, right?
Right. So then don't we go
Well,
automatically, don't we, you know, the target becomes the upside.
But haven't we taken out the Globex high yet?
I don't think so.
No, right? Is it 2046 or 56? Is that it? I believe it is. There's bracket T, right? So 2056 half. That's always a key factor, right? When you're looking at these things, if you want markets to keep moving in one direction, they should be taking out, you know, the Globex low or high, right? And now we haven't taken either one, and we're sitting in about a 2,000 point range from the bottom. Well, we're only down 400 points, right? And we were down 1,900 at one time.
Yeah. Quite a bit off the low.
Yeah. So that may be the attractor on the upside.
Mick J's a Penn State guy.
Penn State?
Yep. Okay, one of our Twitter followers. How do you determine the 5-minute pivot?
The 5-minute pivot, if you're new, is sort of it is proprietary on the way we set it, and it was developed years ago by Pat and some other people. and did a combination of stuff. So it's calculated. I don't really know the formula behind it. I just use it. So if we probably have a switch in the 15-minute pivot now. Let's take a look at it, because I think we have a close here. I think the 15-minute pivot is probably going to a buy now. Let's see. There we go. Oh no, we got to see the next 5-minute close, but where we're at right now, here we go. We're going up. So let me bring this back into the screen so we see what's going on here. Here's your answer about the single prints. Let's see if we run up to 53.75, because we just started getting there.
I mean, I like to look at the volume, because when it pokes in there, you're looking for acceptance, rejection. I mean, is the volume accelerating or is it drying up? I mean, that's kind of things I keep my eye open for.
Oh, you looking on the domes, or where do you look? You have it.
I've got it on. It's not a footprint, but it's the volume comes up right next to the letters,
okay.
The TPOs.
Okay.
All right, we got a couple people in there looking for the 10 rules of trading. I'm putting the link up on Twitter right now. It's in our blog, manovermarket.com. Chris put those up really nice with some pictures for you.
So, like we say also too, that we look at the markets where they make their moves and they like to return to the scene of the crime, right? So when we look at this is the move that it made from overnight. Here's bracket T. These were the post-market Q and R, opened up, put the global SL at 56.5, and then when we fell out of bed here, so that's why we got that bull bear zone at 53.
All right. One of our top stuff guys has a question for you.
Yeah. Here's another thing to look at. See how we're getting to the top of, and let's see, we're getting the moving averages that they're crossing here, but we're getting to an exhaustion area. So that's another thing that we got to be looking at. So go ahead.
All right, one of our top stuff guys here, Lewis, will you teach your daughter to trade? I'm guessing if you do, she would become one of the best traders ever.
Do you know my daughter? Someone's got to know my daughter. Well, let me give you a little hint about my daughter. All right, I got her this summer. She did an internship at Tasty Trade, and she came home every night and said to me, "Dad, I don't get this trading stuff, and it's boring to me. I don't want anything to do with it." So that answers the question. My two sons aren't interested in it. We're never interested in it. I think my baby Joel may be interested in it, but no, none of the family members. I guess they've been raised around me, and they're too used to the good day, bad day. When I left trading and started doing my other business, the older kids would look at Brianna and Joey and say, "You got soccer dad now. You got soccer dad. He doesn't trade anymore. You don't know what it is when he was trading dad." I told you, they told me I was bipolar. I'm not bipolar.
It was Pitloop. We called you Pitloop.
Pitloop.
Loser.
Yeah.
Pitloop.
Yeah, here's it. Pitloop. Oh my God. You know what? Let me tell you about my nephews and my.
I think I'm the only one that went into the trading.
That's right, you did.
Yeah.
Joey tried it for a little while.
Yeah, Joey was in the pit.
My brother Joey.
Yeah.
It would have been different. I'm kind of glad that things worked out the way they did, because all our kids had to find their own way. Not that Anthony didn't. Anthony is awesome at this. So He's going to stick with it. I was going to show, but yeah, my brother has 3 sons. I have 3 sons, and we all had cousin Mikey with us, right? And they just totally aggravated me and my brother for the last 25 years. My brother and I. And we're all about the same size. So if you have clothes in your closet and they're new and shoes, they're gone. You would see them and I go, oh, you want shopping in my closet again?
Guys do that too?
Oh my God. It was crazy.
I want to
And then I got to the point I lost a lot of weight, and I got down to I was like a 33 waist. Now I'm a fat ass again, excuse me. But and so then my kids were like, Dad, you're buying Lululemon stuff?
I was going to say, I just want to thank Pat for putting the exhaustion pivots or dots on that chart. It's saved me quite a few times.
Right. You see it in the 1 minute here. Any other questions?
Yeah, we got a couple questions here from one of our top stuff guys. Can you give specific steps as a trader on how to build your mental capital?
Mental capital. I kind of liked that lady the other day, the sports psychologist, right? And all I can tell you is when your back is against the wall, you have to take a breath, and then you just gotta, you have to trade small and get your confidence back, okay? And that's what she was talking about, right? When you lose money, it's like getting punched in the face, right? When you get punched in the face, everybody goes through confidence problems with the markets because they're not easy. It's not easy. There were times I'd wake up in the middle of the night with 7 kids, a lifestyle, and I would wake up and go, I couldn't breathe, and I was running 5 miles a day, and I would get chest pains, and I would think I was having a heart attack. And the doctor finally told me, if you can run 5 miles on a treadmill, you're probably not going to die. So, but I mean, look, the stress would get to you. So it's about putting a lot of victories together, right? You got to put a lot of little victories. I don't care if they're $50, but you made like 4 trades that day and you still had a victory. That's the end of the day, right? That's what you got to look for. So because wins are wins, and it comes to the point where it was a plan, and you put the plan together, and you had a win, right? So that's what you got to look at. So.
Can I say, I have to add to that because it's kind of like pain medication. You should stay in front of it. You should medicate your pain before it gets out of control. So really guard that emotional capital. Don't do, keep your discipline in check as much as possible.
So Chris started trading stocks, right?
Yes.
And then someone introduced her to futures.
Yes, I traded stocks for probably 6 years, and then ran into a futures broker, and I think I've been trading futures ever since.
Well, I look at and because I had a company that was that's what Archipelago was before. It was a NASDAQ SOS room, so small order execution system, and I kept looking at people thinking, why are they putting all this money up in margin to day trade stocks when they could trade futures and get more bang for their buck? Now that's a two-edged sword, right? Yeah. You trade futures and you lose more money than you thought. A 1 lot mini, you're controlling like 100,000 worth of stock. So you got to understand that when you're trading this stuff.
Well, when you're a stock trader, you heard the story that if it didn't work out, it was going to be a day trade, but then it became a swing trade.
Right.
You don't do that with futures.
Well, that's I said that. I used to say that all the time when I would talk to them. How you turn a day trader into a position trader? Let the market go against them. Mm-hmm. Right. And we're going to share the screen. We're going to see our faces. How's that? Stop sharing.
Yep.
Got us. All right. There you go. So
about 10 minutes.
I met Chris about 8 years ago. I was giving a seminar talking about the rules of trading, and she was there with a good friend of hers who was an airline pilot, correct?
Yes.
Yes, she's still in. Is she still an airline pilot?
No, she's a trader.
She's a trader. She trades full time, right?
Mm-hmm.
So anyway, and we go over this all the time, and what I'm talking with Debbie about is how come there's not more women traders? Because there's no pit anymore. You really don't have a disadvantage. You can sit at your house behind a computer like we're doing right now and trade. And it just, I don't know if it's the emotional makeup of women versus men, risk taker. Is it because it always traditionally was men? I don't know.
I've read that women actually make better traders. I started doing some research and came across a couple articles, and they say that women are less affected by the ego aspect of it. So it's easier for the woman to take a loss and not take it personally. So they actually supposedly are very well suited to being good traders.
So you're trying to say men have bigger egos?
Yeah.
Basically, that was men have better egos. I don't believe that for a minute. You think we had that alpha male thing going on?
Yeah, I think so.
Oh, it was in the pit. It was crazy. It was crazy. You know. So, any more questions, Jen? I want to take this time because I know Tuesday I sounded like a complete idiot. So I'm going to explain the error that I had in the pit. That was $1 million winning error, but it was not my error. So orders would come written on paper like this, okay? So the broker saw an order that said buy 100 S&Ps, and let's just assume the market was at 2046. He folded the order like this, and then he proceeded to go into the pit, and he sold the order instead of bought them. So I was a buyer of 50 contracts because if he was selling, I was a buyer. We've got a buy and a sell, okay? And then there were 5 other guys who bought 10 lots from him. He wrote down the prices, okay? And when he wrote down the prices and the people he traded with, because it was a buy order and was written on this side, a buy order, they got printed in as a buy, and it was a buy order. The problem is that he executed the buy as a sell, okay? What we got going on? All right. So in the morning, the key punch people that key punched the buy, 50 with Lewis Borsellino, and I had a buy because he sold. When I said buy him, he was offering them. So I thought I had a completed transaction at that point, but he had a buy and I had a buy. So the next morning, the market opened 1,000 over. It was $1 million winning out trade because it left him short 100 contracts from the high, okay, all right, and when the manager from the clearing firm brought the order back to him in the pit, said, you know what, just buy him on the opening and we'll give the $1 million to our customer. And the guy goes, I'm not doing that. If this was the other way around and I filled it backwards and they had $1 million loser, would you be telling your customer to take the higher price? And so there was this big argument going on back and forth. So then I heard that this argument was going on. But prior to that, I told him, hey, it's your deal, man. You screwed up the order. That 50 lot, that $1 million, it's yours. God bless you. I hope it doesn't happen the other way around. So then they started making a problem about it. So what I did is I went over to the clearing firm and the house manager and the people arguing with my out trade clerk, and I said, you know what? I'm not doing that. I'm keeping the 50 lot. I'll see you later. And I covered it at a $500,000 winning out trade, went and cut a check and took the check out of my account and put it in his pocket and said, here's your $500,000. They're going to argue with them. Let them argue with you. And then we walked away. So, you know what? Mm-hmm. And that's the way that pits used to be. If you weren't an honorable guy, people didn't want to trade with you. And, so.
It's a good story.
Yeah, it was. And because of that, one of the things that I did, I came up with the idea for catastrophic out trade insurance. And I have a friend of mine who's in the insurance industry, which is another good story. I will write this. So I went to, he introduced me to Hank Greenberg, and who was basically the single largest shareholder of AIG Insurance. And I went out to New York. I met with the AIG people, and we came up with a catastrophic out-trade insurance policy. And then we tried to sell it to traders, and it didn't work because we really should have sold it to the clearing firms that had traders that were undercapitalized in case there was a mistake. I mean, imagine you made a mistake, you were the wrong way on 9/11, and you were long. You couldn't get out for 4 days, you know. So, but AIG took that concept and ran with it and did catastrophic out-trade insurance for exchanges, which I didn't get any part of. Another one of my bright ideas, you know. So, any other questions? The market seems to be testing the top here again at 51.25, 53.
Why do you prefer Charlie Cochran's profile inside Edge?
You know what? It's the only one I've ever really. I kind of grew up on it. I wasn't a big profile guy. I've known Charlie for 20 years, and when I started training again, he said, "Here, take my platform." And he was the guy that took some time. Him and JB took time to explain it to me. But at the end of the day, I had to, you have to watch it every day. I mean, I still am learning different things about profile. So
I think the nice thing about it is that the volume is just overlaid right on it.
Yeah. And Charlie was one of the first guys to actually put volume with the price. Originally, profile was just price.
Right.
So,
he's a volume profiler.
Yeah, he's a volume profiler. So I'll tell you what, the 1 minute chart's telling us that we're going to try to get to that 53. It's 100 points away. I mean, and then we've got this whole idea: will we get inside value? I mean, can this day turn into taking back yesterday? Right? Did we trade? We opened out. Yeah, we opened up out of range
Today. Yeah.
Yes. Right. So there's only a 32% chance that we would go back to here. Right.
Very good.
Right.
Go,
so
go ahead and share your screen. Go ahead and share your screen again.
Oh, I'm sorry. Where is the screen? Here we go. All right, so we are approaching the bull bear zone, right? Here's that. What we'll talk about the move. Where did it come from, right? We got the single prints being filled in now all the way up to here. Okay. So what's the name? What's Morad? Which is he's futures trader. Futures trader.
Futures trader 71.
Yeah.
Stage 5.
He's got some great stuff. He's a big profile guy. He's done some studies that say that when you open up out of range, you only have a 35% chance that you will get back to the previous day VPOC. So that would be up here. So we still have a while. I mean, this is going to be a big deal if we can get back inside value. Be a big deal. That's a big move from the bottom. We are now only down 150 points on the day. So, any other questions?
Just covered everything.
Okay. I tell you, that catching this move right here, it's just you didn't know what to do here. Right? Well, you're in the middle. I said if you want to, it gets down below here, you're short, and you want to be long above it. Yeah. So, I mean, you probably in the middle here. You could have, if you were thinking it was still going higher, you could have bought it in here with your stop below 41. If you thought you were going to keep going down, you could go short here and put your stop right here, and you're not getting hurt, right? So those are the things that you look at.
Eddie over at Tops that said, "Welcome to Little Italy University."
The story about that was there used to have, I guess he still has it, Ben Lichtenstein has that where he does the market commentary. So they weren't allowed to tell people who the brokers were. They could say the firms like Goldman was selling, Shy Corp was selling or buying, but they weren't allowed to say Lewis Borsellino selling. So they came up with a nickname for me, which was Big Italy, and then my brother was Little Italy, right? And then when I left, Joey was number one, the Big Italy. So.
And Eddie does some great things on Twitter, guys. If you want to follow him, it's @TS Eddie.
Hi, Eddie.
So. All right, I think that wraps it up. You want to close the show, Deb? All right, go ahead. Bye, everybody.
All right then.
Bye-bye.